Over many years, as a professional stockbroker and advisor, I've observed that most investors get it horribly wrong. Sadly, only a minority beat the ASX 200 by a decent margin. Most investors make small returns and often lose money either because they've missed buying opportunities or got stuck with losing positions. My name is Michael Gable. Having worked for Macquarie Bank for a number of years and experienced the GFC's devastation, I realised that traditional stock analysis was one-sided and woefully inadequate. Like most investors, including professional stock advisors, they focus on either the fundamental strengths and weaknesses of a company or daily trends and volatility in the market, but never do both simultaneously. As a result, they get a skewed view of that stock. This is how it often plays out. Using a stock chart to look for trends, you buy a cheap stock which seems like a good deal. You think it should start going up, but prices keep falling, so you lose money. Or you hear about a company which sounds good on paper, maybe it's been featured in the media, and small mining companies were a prime example a few years ago. You get in thinking you've done well, but the stock goes nowhere and you often lose everything. If this is you, it's not your fault. Probably no one has shown you the right way to go about doing it. Certainly not the media. So to consistently make money in the stock market, you have to understand and balance these two radically different forms of analysis, the fundamentals and the technicals. Fundamental analysis, as the name suggests, attempts to determine the health and performance of the company by looking at key numbers and economic indicators, including earnings growth, debt levels, and market share. Do they have a product that people want to buy? Are they being speculative, as in the mining companies? Is their management structure solid? What's their capitalisation? Technical analysis involves analysing the supply and demand of a stock and how emotions are driving its prices higher or lower. By understanding this, you can identify when stock prices are running ahead of themselves or if they're being oversold. Now, your investment philosophy may be buy and hold. So you believe technical analysis is for short-term traders only, or vice versa. But here's why you should combine both methods. When analysing complex companies, it is essential to incorporate both fundamental and technical data in order to obtain the most accurate picture of a company's position. Our experience consistently proves that utilising both fundamental and technical analysis will provide an edge over the average investor who gets average returns or below average returns and higher losses. Obviously, while rates of return vary depending on your risk profile, we've achieved between plus 13 and 16% returns above the ASX 200 for clients, while the ASX went down 3% during that period. So if you'd like to improve your returns, there are 3 ways we can help. Start by reading our free guide on how to use fundamental and technical analysis to improve your returns. Then, join the ranks of thousands of investors who trust and rely on our investment strategies every week. And if you're a serious investor, ask us about our free portfolio reviews where I'll analyse your stock portfolio and I'll give you recommendations where you should be improving and where you're at risk. All of these options are available at fairmontequities.com.